Perfect. Okay, so we will go ahead and get started. If everybody on the virtual side can let us know if you can see everything, can you hear us? Just give us a thumbs up. Sally or anybody, let us know that it's good. All right, perfect. Thank you. All right, so I am Shannon Osborne. I am an associate director at Student Support and Advocacy Center. We focus on financial well-being. This is Money Smart Day, one of our financial literacy conferences that we're going to do. And then we'll go ahead and get started and introduce everybody. But this is a hybrid session. So we have a group of like 10-ish or so, 13 people virtually. And then we have you amazing people in person as well too. So Ari's going to handle the virtual component. So if you're virtual, if you have any questions, feel free to type in the chat. And then Ari will let you know if there's any virtual questions. And then in person, feel free to raise your hand. And then I'll reach out to you all to see if there's any questions in person too. So we'll jump on in. So I'll let you two introduce yourselves for your slides and stuff. Do you want me to do the clicking or do you want to do the clicking?
We could do the.
Yeah, we can do it. Yeah.
Perfect.
Yeah.
Perfect. So, hi everyone, my name is Amanda Hall. This is Jenny Books, and this is buying and financing a home as a first-time home buyer. So before we get started, I wanted to introduce ourselves. So for me, I'm actually a GMU alumni. I graduated in 2018 with a major in sport management, minor in coaching. Because of COVID, unfortunately, I did get furloughed in 2020 and ended up taking a risk and going into real estate. It has been great ever since. I've done about 7 million in sales since I started as a solo agent, and 60% of my clients are either first-time home buyers or first-time sellers.
So, hi everyone. Thanks for having us. Jenny with Union Home Mortgage. I have been in the mortgage business since about 2004. I started my career in finance shortly after high school. With my mortgage experience, I started out doing mostly home equities, which a lot of people don't think of mortgages when you think of home equity loans or home equity lines of credit. But shortly after that, moved into helping families actually get into homes with a traditional type of mortgage. Also spent a lot of my career working with construction loans, construction to perm, more short-term mortgages. So I've seen a little bit of everything in my years. About 50% though of my clients are first-time home buyers, and about 50% of the loans that I do are VA loans. One of the things I love about working with first-time home buyers is that a lot of times I don't think it's possible to get into a home. And so for Amal and I, it's super exciting when we can get folks to the closing table and kind of just see that excitement.
There
we go. All right.
So before we get into the journey, in this market and economy, sometimes buying a home feels a little unattainable, especially right now since a lot of Americans are struggling. But there are many benefits to buying a home, and one of them being tax benefits. You can deduct most or all of your interest that you pay throughout the year on your taxes. In addition, appreciation. So your home value is expected to appreciate. Now, I want to say that with a grain of salt. It is not guaranteed, obviously, depending on the market economy. But year over year, you should expect about 1 to 3% appreciation in your home. With equity, I don't know if you wanted to talk a little bit about that.
Yeah, so especially in this area, the surrounding DC area, in Virginia as a whole, we're pretty insulated from the ups and downs that other parts of the country will see in real estate. Even when we're in a down market overall, our area will continue to appreciate because it's such a transient area with all the federal positions, military coming in. It's really hard to go wrong with buying a house. If it's the right time for you, you're more than likely going to come out ahead. Like Amal said, it's never guaranteed. But if you plan to be in the home for more than, I'd say 3 years, you're going to come out ahead.
With predictability as well. Unlike rent, I know renting is attractive for many people, and we'll talk about that later, but you're not going to see that money back. You're essentially paying your landlord's mortgage. Your landlord is going to see that money back. If you're paying $2,000 a month, let's say on a mortgage instead, as your home stays in value or maybe appreciates a bit, you're paying down that principal mortgage.
Mhm.
And then you can use that equity for an equity line of credit.
Yep.
Or even get that money back when you eventually sell.
Yep. And then
Uh,
upgrade,
yeah.
hopefully upgrade.
hopefully
into-
upgrade too.
Into a new home.
And then freedom, the home is yours. If you want 3 chinchillas, if you want 5 cats, if you want to hang weird art on the wall, completely up to you. You don't have to get landlord's permission. Stability,
Yeah, and with stability, I mean, there's so much peace of mind and a sense of community when you own your own home. You know, just having those neighbors next to you that you know are going to be there more than likely year after year. It's just a great sense of community. And then also, I'll touch on this a little bit, your payment's gonna stay the same. So you have stability in your housing expense. You don't have to worry that your mortgage payment's gonna go up another $300 the following year. Now, I'll touch on the mortgage payment a little bit. So a mortgage payment is typically made up of 4 different components. So you have your principal and interest. That's gonna stay the same for the life of the loan. So until you refinance or, until you refinance, you're gonna have that part of your payment's gonna stay the same. And then the next 2 components are considered your escrow, and that's your taxes and insurance. So your taxes we collect, and then when it comes tax time, when your real estate taxes are due, we're gonna pay that to the county or the city. And then the homeowner's insurance, that's collected as part of your payment as well. And we hold that in the escrow account, and then that's paid out to the homeowners or your insurance company to cover your homeowner's insurance, typically once a year.
and although your taxes on the house, because especially in Fairfax County, taxes are gonna increase year over year.
Yeah.
Taxes and maybe your insurance, if let's say your insurance premium increases, those are the only things out of your mortgage payment that could increase.
Absolutely.
But your base principal payment on that mortgage should never change. Or will never change if you have a 15-year mortgage or a 30-year mortgage. That is the stability you can count on.
Absolutely.
Quick fact, you want to talk about this?
Yeah. Did you do that?
Oh, actually, so as I mentioned before, there are scenarios where renting is worth it in my opinion. I mean, a lot of times military rent, if you're only going to be here for like 2, maybe 3 years, maybe it might be worth renting, just because you're not guaranteed to make that money back if you sell your home again. Just because appreciation is not always like it was the past 30 years during the pandemic. But if you're able to, the way I say it is if you're willing and able and financially ready to buy a home and emotionally ready, because it is kind of emotionally taxing. If you're able to do it and you're gonna stay in the home for at least 3 to 5-ish years.
5's kind of that sweet spot.
Yeah, then you should be good to go. And it is money back in your pocket. And that gets you quicker to financial stability and generational wealth that we're looking for.
And that's the key, you know, and that's why Amal and I are doing things like this, because we see how it works. It helps you reach financial goals, because there's more financial goals that we all have other than just buying a house. It helps build that wealth, and generational wealth is such a big thing.
And I'll just point out that with my husband and I in 2021, a lot of family members, especially during the height of the market and craziness, they were telling us to rent. And I guarantee you that if we didn't buy at that time, we did quote unquote overpay for the house. But if we didn't buy then, we wouldn't have been able to afford now. So that is just something where I'm grateful that we took that chance, and now our home has appreciated. So we bought early, we took that chance, and this home is going to be not our forever home, it's a starter home, but we're going to keep it in our portfolio forever. So now that we've kind of talked about the reasons why, this is the 8-step macro level journey step by step, right? So first and foremost, and we'll dive into each one. I'm just going to briefly go through it. You want to hire a realtor, obviously, me if you'd like, but do your interviews. Make sure you don't just pick the first one that you contacted on Zillow. In addition to that, right after that, you're gonna get pre-approved with the lender, hopefully Jenny. You start to research your areas. So this is where you start to understand what you want, what you need, what neighborhoods you're looking into. Through that, we start viewing homes, submitting offers. Once we have an offer accepted and you're under contract with a home, your escrow period is going to begin. That is when your loan application starts. Through that escrow period, you have contingencies. If you've never heard that word before, contingencies are basically protections that you as a buyer have during the transaction. And then at the end of escrow period, you receive a closing disclosure. Jenny will go over that. In closing day, you wire the funds, sign the papers, get the keys. So, hiring a realtor. So the reason why I say don't just pick the first one that you contact off of Redfin, Realtor.com, Zillow is because you're looking for a good realtor. And there are a couple bad ones. A good one will negotiate with you with your best interests always as the top priority, always. They'll guide you through all the forms and processes. There's a lot of disclosures. There's a lot of forms. These are things that we either need a request from the seller or make sure that we find out for you. We'll also offer objective information. This one is overlooked a lot. So in this process, like we were saying earlier, it's very emotionally taxing. You are emotionally committed to this process. You want a home so badly that sometimes you may not be thinking clearly. That doesn't mean that you're wrong or right, but we offer objective information. What are the good things about this home? What are the bad things about this home? What you should look into. In addition to that, provide fair and ethical treatment. And we provide up-to-date knowledge on the market, which will help us make a better offer when we're putting offers.
All right, so when it comes to choosing a lender, just like Amal had said, there's a lot of lenders out there to choose from. There's online lenders, but a lot of it comes down to communication and having a relationship. So let's kind of hit some highlights of what you need to look for when you're choosing a lender. So someone who's going to work well with your realtor and communicate. So I can do my job without a great realtor, but it is so much easier and it's so much more efficient when you have a realtor that's a true partner.
I mean, we've done multiple deals together and we know each other. We're learning from each other too, that you know what I like, I know what you like.
Absolutely.
And it's just a smoother process.
You know, the flip side to that is that we respect our businesses and we know how to, we stay in our lane. I don't try to answer questions that are related to the realtor contracts, the real estate contract. So if I'm working with a client and they start asking me more in-depth questions about the actual real estate transaction, I'm gonna send them back to Amal. And vice versa. When the buyers are starting to ask detailed questions about the mortgage and down payment,
I say, please talk to Jenny.
Yeah, that's not her lane. She could probably answer most of the questions, maybe 80% correct, but it's not her responsibility to guide those. So you want to work with a lender that's going to work really well and communicate well with the realtor partner, because it really is a team effort. Our goal is to get that home buyer, especially that first-time home buyer, to the closing table as quickly as possible and with as few hiccups as possible. So that's so important.
Hiccups will happen.
They often do happen, but that's you have to have a good team there.
That's what we're here for.
Yep. The next one is to know your buying power number. So a good lender is going to walk with you through mortgage estimates and be able to tell you how much you can afford. Tell you how much cash you need for closing, what that monthly payment is going to look like. So those are the three big numbers that every buyer is going to want to know, but especially first-time home buyers being able to know, okay, how much cash do I need to make this happen? What's my monthly payment going to look like? And then how much, does that equate to in a sales price? So it's so important. Providing timely mortgage estimates. So real estate typically starts happening on Friday afternoons and it ends on Sunday night, sometimes Monday morning. So you want to work with a lender that's going to be able to answer your questions by text, phone call, or email outside of 95 or 925. I got I-95 on there. 925. So somebody who's going to be able to on a Saturday morning work up a mortgage estimate for you. So it's just very, very important. And somebody who's going to narrow down your budget. So Amal had mentioned on the previous slide about being objective, given different opinions. And that's part of what your lender should do as well. So it could be that you have applied for mortgage and you don't think that you can, you have a certain monthly payment in mind, but you're approved or pre-approved for a much higher amount. So your mortgage lender should be able to put some perspective around that. With first-time home buyers, usually they're getting started in their career. And so they might be able to actually push what they're comfortable with on that monthly mortgage payment because they know that their income projection is only going up year after year. Or it could be that they're gonna have a car loan that's going to be paid off in a couple months, and that's going to free up an extra $400 or $500 in their budget every month. So just gives a little bit different perspective. But
And it's funny that you say that because I mean, obviously I don't regret the home that my husband and I are in,
Mhm.
but we were so concerned with our income at the time.
Yeah.
And I wish somebody told us your incomes will increase, maybe push it a little bit more, and maybe we could have gotten a little bit of a bigger house or something along those lines. Because this mortgage payment, thank God it's comfortable for us, but it's one of those things where in hindsight, if our lender maybe mentioned that,
Mhm.
I would have been like, maybe we should think about it a little bit more.
Absolutely.
You're set?
Absolutely. Yeah, I'm good. I'm good. All right, getting pre-approved. So really getting pre-approved is gonna be the first big step in the home buying journey. So, if you start talking first with your realtor, one of the first things they should do is ask you have you been pre-approved? And if you haven't, they should connect you with a good lender. And that's how Amal and I work. I've had people who've come to me first to get pre-approved and they don't have a realtor. I'm able to pass them off to her and vice versa. But getting pre-approved is such an important big first step because it tells you and your realtor how much home you can afford. And it also tells you what that monthly payment's going to look like. A lot of first-time home buyers, they know they don't want to rent, right? But they are hesitant to get started. And a couple of reasons that I hear is they think it's going to take too much time or too much effort, or they think it's going to cost something, or they think that they're committing to buy. If they start that pre-approval process, they think that they're committing to buy
That's just not
right away. And it's not true at all. I don't know. Amal and I have one client we're working with. He's going to get to the closing table in about a week and a half, I think.
Oh, wow. Yeah.
Maybe a week, about a week and a half. But we've been working with this young man, first time
3 months.
home buyer, longer than that.
True.
Probably since our first conversation. It's probably last.
He didn't seriously start
September?
looking end of December. Yeah.
And then we have another client who just reached back out to us just this week, who we started talking with last year. And so there's not any pressure from us and there should never be from your realtor or your lender to move quicker than what you're comfortable with. Okay. So that's part of that pre-approval process is just, let's start a conversation about numbers. Let's put some firm numbers around that pre-approval.
And honestly, I think a lot of first-time home buyers don't realize that the pre-approval, it's scary to them, but really getting the accurate numbers on what you can afford, because a lot of people think they can answer how much they can afford just by looking at their finances and then doing like a random estimator on Google.
Yeah.
And truthfully, there's so much more that goes into it. What loans do you have? What county taxes are you looking in?
Yep.
And all those other factors. So it really does give a nice picture, an accurate picture. So even if you're not ready for another 6 months, if you need to work on your credit score or something like that, we're able to work with that.
Absolutely. Absolutely. So let me just take a minute and walk you through what that pre-approval process typically looks like. So I can't speak for every mortgage lender out there. Every mortgage company has a little bit different process. But this is going to be more specific to what I do and how I operate. But I would say most mortgage companies are going to work pretty much the same. So for me, I will text an invite to my app. So everything can be done by your laptop, tablet. Most folks, though, I would say 90% of folks do everything from their phone, which is really, really easy. It takes about 10 to 15 minutes. With my process, I add Amal or whoever that realtor is as part of the deal. And so that realtor is already in the loop from day one, which is absolutely fantastic. So the first section of that application is going to be your personal information. So full legal name, social security number, date of birth, address. That's pretty much it. The next section is typically going to be employment. So for every buyer, we require 2 years of employment history. Okay. So it doesn't necessarily have to be with the same company. not necessarily in the same job, but it has to be 2 consistent years of employment history. So we're going to need to know who you worked for, what was your salary, what was your title, start dates and end dates. Okay. And we're going to check all of this. So just be as upfront as possible, as accurate as possible. If there's any gaps in employment, if you had, you know, a month between jobs or you're out of work, and it took a couple months before you found that next job, just be upfront with your lender about that so that if we needed to get extra documentation or letter of explanations or anything to kind of support that gap of employment, we can do so early on in the process. Now let's talk a little bit about income. So if you're a salaried employee, super easy. We just take the annual salary, you know, break that down to a monthly pay, and that's it. If you're hourly paid with consistent hours, that's pretty easy as well. But when it comes to anything that's non-consistent, like overtime, bonus, commission,
Independent contractors like me.
independent contractors, realtors, mortgage lenders, shift differential nurses can be, nurses are tough. They usually have about 6 to 10 categories, pay categories on their pay stub. So any income that's not necessarily consistent or guaranteed, we're going to have to take a 2-year average. So just keep that in mind. You're starting to think about buying that first house, and you're on a commission, bonus, anything non-traditional, if you will. Just kind of keep that in mind and talk to a lender early so you know where you need to be, where those numbers need to be. But for that non-traditional pay, it's always going to be a 2-year average.
And on that last bullet, I just wanted to touch on kind of on a personal story. Local is always best. I worked with a buyer that really insisted on using a mortgage lender that was referred to him by a friend of his. That mortgage lender was in Hawaii. And the home obviously was in Virginia. I'll say that it took about a 24-hour delay to get any answer to anything. That unfortunately that deal ended up falling through. And I think part of it was because of the lender. But it was one of those things where I advised him, I was like, please, let's try to get a local lender. You can choose. You don't have to use one of mine. Let's just try. He was really adamant on it. And unfortunately, he lost the house.
Yeah.
So it's one of those things where local is always best, communicative. I need to be able to text the lender and see how the loan is going. I don't think I ever heard anything unless I reached out to that lender first, to be honest. So that's just a anecdote that local is always best.
Yeah, I've had some, I got a client, this was about 3 months ago, she was pre-approved already. Very easily pre-approved, good credit, good income, no, you know, I get a perfect client for any mortgage lender. Well, she was pre-approved with an online lender. Her realtor submitted an offer on her behalf with that pre-approval letter from the online lender, and the seller wouldn't even consider the offer.
That's also another thing.
Yeah,
too.
because it was an online lender. They're notorious for delays, not really looking at documents and switching gears last minute. So relationships are just so important. Knowing you can pick that phone up, you can text your lender, your realtor, and vice versa. I can text Amal if I have questions on a contract, and vice versa. And I'm always going to communicate if we're running into issues, which is big. If that buyer is not getting me the documents I need, I can reach out. So there's a lot.
I can kind of poke and nudge them.
Yeah, there's a lot of benefits to
Sure.
working
Yeah.
with a local realtor and a local lender.
What questions for the end, or can we ask?
There's a question one in the middle in a couple slides. If we have some questions now, we can do that.
Absolutely, yeah.
I had one quick question, then maybe it looks like there's one line, but my quick question was, you mentioned the 2-year working,
Yes.
2-year work history.
Yes.
So for those that are graduating right now, do you recommend that they work a full-time job for 2 years and then try to get a house? Or
So,
how do you
right, yeah,
recommend that
thanks
work?
for bringing that up. I appreciate it. So we can use school as part of that 2-year history. So we can, yeah, we're probably gonna want to see, so if the student is if you're graduating, you have an offer letter, we can usually go with that offer letter, as long as it's in a similar field. If your job is gonna be, what you studied, we can usually make that transition pretty easily. Absolutely.
Any other questions?
If, I will say though, if you had any kind of paid internships, we're gonna wanna see a record of that. So anything that you had a 1099 or a W-2 issued for, even if it's, you know, a couple $1,000, we're gonna need record of that. Absolutely.
So we have an online question from Samuel. He says, do you have any preference on lenders in the area? So I'm gonna assume he means the Northern Virginia area.
So that would be me. That would be me. So, I've worked with, so we've got a couple, clients we're working with that have worked, they're looking up in the Arlington area, Fairfax area. Tim was looking in,
My client.
yeah, in the Woodbridge area. So yeah, absolutely. So I say local, I can cover all of Virginia, but it's more of somebody that there's a connection with, somebody that can respond quickly, where that seller and that seller's agent has some recognition of the company name, knowing that it's in the state, and they can reach out anytime. So great question.
And I guess I'll point out that just because there's a lot of military in the area, a lot of people use Navy Fed and other banks. And those are great because they offer great mortgage rates and benefits and usually people are all competitive. But it is one of the things where they do also have a history of delay and other things, and it's hard to being respectful. It's hard to get in touch. Like I can call Jenny. Sometimes if I need to call 1-800 number to get to the Navy Fed or to the bank's Wells Fargo, whoever it is, to get in contact with that lender, it's kind of difficult as well. But honestly, at the end of the day, it really is just who you connect with, who communicates with you, who do you feel comfortable with, and who has a reputation.
Absolutely.
Yeah, good reputation.
And I say local, I actually have a realtor I'm working with down in Florida right now, and I'm setting up the home equity for the client on the home up here. But the offer is going in for a Florida house. So, it's still considered local because they can pick up that phone and reach me, which is great. Yes, ma'am.
So we had another question come in, if that's okay.
Absolutely.
So we were
Is
gonna
it
get
like-
all the questions.
So this is from Asha. Is there any steps for financial planning recommended prior to starting the roadmap steps? It seems like she's in the financial planning / review process. Is that a part of the pre-approval process of needing to get your finances in order before starting the roadmap?
I would say that you kind of help get the planning in order.
Absolutely, yeah, absolutely. So we're gonna talk a little bit
Yeah.
about what steps need to be taken to help prepare a first-time home buyer to buy at the very end. But absolutely, at this step, I can walk them through what they need to work on so that they can be approved in a year. Yeah, so whether that's credit repair, whether that's saving more money for down payment, all of those things. And any good lender should be willing to do that. But not all of them do.
Any others?
One more, and then we'll have you guys go to the next one.
And it's a
Yeah.
quick one. Does getting pre-approval require a hard credit inquiry?
Yes, yes.
And then I guess my only follow-up to that too would be how long does it usually last for?
Is it
Typically
different for everyone?
not, yeah, it can be different. Typically they're good for 90 days.
Okay, cool. They'll have you guys.
I've heard 60 to 90 days.
So
yeah.
so if somebody's shopping around for a mortgage, I don't want to get too much off topic here,
Yeah.
but if they're shopping around for a mortgage, if a credit is pulled multiple times for a mortgage within 30 days, they don't get dinged multiple times. It only shows as one, hard inquiry.
And a lot of people get scared off of that ding.
Yeah.
I would say that don't be scared of it. It's
Yeah.
not really that big. And unless you're really at that brink of you could get approved or not, kind of in that low 600s,
Yeah.
you could be worried then. But if you're high 600s, 700s, even 800, but
Yeah.
you shouldn't worry about it too much.
I've heard some advice where it's like, if you're gonna look into interesting and purchasing a house, you wanna try and, I guess, look at multiple out in a near span, so like it counts as like one inquiry.
That's what
Yeah,
she's
that's what I was saying,
That's
like
what she's
within that 30-day
Yeah.
period. So if I pull your credit and then you go to Navy Fed and then you go to Atlantic Union Bank and everybody pulls your credit, a hard credit pull for a mortgage, it's only gonna ding your credit one time. And it doesn't typically, just like Amal was saying,
It's really not
won't
that
really
big.
take you, it won't take most people out of qualification. So it may drop your score. I think I've seen it drop, I mean, the most, like 18 points. That's unusual. Usually it's no more than 10 points, but your credit score will bounce back after that. So unless you think that you're on that borderline, I wouldn't be worried at all.
Thank you.
Yeah, of course. So down payment, a lot of you can I talk?
Yeah, go ahead. Go ahead.
So down payment,
It's all
every loan program has a little different requirements for down payment. Down payment requirements will typically range between 0 and 3.5%. So don't let that be something that's going to scare you from at least starting that conversation with a lender. There's also some grant options that are out there to help with that down payment. So the most popular program for first-time home buyers is the FHA program. The reason it's so popular is because it has it can work with a lower credit score down to 580. And it has the highest debt to income ratio of 55%. So that means it gives you more buying power. But it does have a 3.5% down payment, but there's a grant we will often attach to it to cover 2.5% of that. So you only have 1% out of pocket. And then there's options to actually do a second mortgage. It's a little different. It's a lot of information if I go into the second mortgage option for this event, this seminar. But there are ways to get into a home with no down payment. So I will say everybody's situation and home buying journey is a little bit different. So once you start thinking about buying a house, you're going to have your friends, your family, all telling you.
Everyone's gonna give you advice.
Everybody's going to give you advice. But you got to remember, everybody's situation is different and programs will often change. So underwriting guidelines can change. New programs can pop up, new grant options can pop up. So what
Different loan brokerages have different programs
Yep,
as well.
Absolutely,
Yeah.
absolutely. So, just don't start getting fear. And don't put the brakes on buying a home just because of what other people are telling you. And that's where we come in as professionals to help guide you through that process.
And to tag along with this, is kind of my favorite graph is because we said it earlier, the sooner you can buy real estate, the better. The sooner you get to your financial stability, generational wealth that we're all looking for. So a lot of first-time home buyers think they need to have 20%, 10%, even 5%.
Yeah.
But realistically, if you have the minimum down payment and you're emotionally, mentally, and financially able to buy, I always say those three things, do it. Because by the time you wait 5 years to save up more, that home has appreciated in 54,000 in value.
Yeah.
Again, this is projected from Keeping Current Matters about how the appreciation will happen over the next 5 years. Again, is it 100% accurate? It's predicting the future, yes. But it's to show that if you bought 5 years ago, you would have had that equity built into your home with the minimum payment instead of saving up and now having to buy a house that's $54,000 more.
Absolutely. Absolutely. So I know when my husband, he bought his first house, down in Louisiana. It was his first job out of grad school was in Louisiana. And, it was a small little ranch style, didn't have everything he wanted, but it was, had been well maintained. He got into it with a price point he liked. And when he got the job up here in Virginia, he was able to sell that. And I think he made like 25,000, 15,000, something to help him get into his next home up here in Virginia. And he lived in that home. We lived in that home for, yes, five years or so. And the timing for us worked out really good. We were able to sell it, make a chunk of money to put down on the house we have now. And so it really works. I mean, and that's why we're here. We get so excited about this because Amal and I both have our own stories to see how home buying has really helped our financial picture. And it's really, the earlier it has to be the right time. So don't hear something we're not saying. But it really is a great thing when you can buy early.
Yeah, and I would just say a lot of this is geared towards that starter home. This presentation is geared towards that starter home. I'm still early on in my real estate career, I guess. In my portfolio, we just bought our first house just 3 years ago. And it's a starter home. It's 3-bed, 2-bath. It's on the smaller side. But we know that that's gonna help us for the future. We know it's a start. Did I want a 4 or 5 bedroom with 2, 3 levels? Of course I did, but you gotta take what you can get, and we know that, I just believe in it so much, seeing my parents have 2 rental properties. I know it works, and I promise you, it's a lot less riskier than the stock market, so I can tell you that. This is the questions area. Is there any other questions?
Yes, again from Asha, does this, or the thing that you just talked about, does this apply, for example, buying a townhome, a condo, apartment? So I think anything that's not a single family home.
Correct, yes.
It does, and we're gonna talk, it might be the next slide, about some of the differences in condos and
That's at the
HOAs.
end.
Yep.
Yeah, we'll touch that on the end, but yes, this process is similar regardless of what you're buying. The only time it would be different, maybe if you're buying land or commercial property, if that.
Yeah, that's a whole.
That's a whole nother
different,
thing.
Yeah,
But if you're buying a residential residential property, all of this should be the same.
absolutely.
Any other questions? What about you guys?
Yeah, do you guys have any?
Nothing? Okay.
Y'all are easy. This is.
So researching the market. Now, although I know the market very well, I live in it every day. I research it every day, so I can make sure I'm the most knowledgeable for you. At the end of the day, I can't tell you where to live or what to buy. I just can't. The reason why I say that is Virginia is a buyer beware state. Now, I don't want this to scare you, but it's just a law that Virginia has, pretty much saying that you're buying at your own risk. It's up to you to do the due diligence on your end to research the home that you're gonna be in. That doesn't mean that I can't help you research stuff. I can give you the tools. I can give you, if you have questions about the gas tank that's on the property, I can give you items and research material about it. But it is, at the end of the day, up to you to ask the questions and make sure you're comfortable with what you're buying.
Absolutely.
Along with this is Megan's Law. Again, with the fair and ethical treatment, I can't tell you, don't be in this neighborhood, don't do this, don't do that. It's up to you to look up the crime and sex offenders in the area. If you have kids, if you're worried about crime, if you don't want to be in a crime-ridden area, you tell me what neighborhoods you want. I can't tell you. So, and then in this researching area, researching market step, it's also a balance between wants, needs, and your budget. So I always give this example. If you're really honed in on this one neighborhood and that one neighborhood is in like the 450s, right? 450,000. But let's say your budget is only up to 400. We need to think about, okay, we can't maybe do this neighborhood unless maybe a fixer-upper in that neighborhood comes on the market. Are you willing to sacrifice location, commute, bedroom amount, things like that? It's how do we handle your wants? How do we handle your needs? And how do we fit that in the best possible way within your budget?
So
Yeah.
one of the rules we kind of work by, and this is probably more Amal than me because she's the one out there finding the house for you, but an 80-10-10 rule. So when you're looking at homes, 80% you should like the home. It should meet your needs. 10%, you don't really like it, but it's something maybe you can change down the road, and then 10% you can just live with. And because you're never going to get everything you want in your home, even those folks that have bought, this is their 5th home they're buying. They say this is gonna be their forever home. Usually it's not their forever home, or they end up changing things once they move in because it wasn't exactly what they thought.
Unless you're custom building a house on a piece of land,
Yeah.
you're never gonna get 100%. I will do my best to get as close as possible. Don't get me wrong. But the reality is there really isn't that dream home unless you really customize that build.
Yeah, absolutely.
I like that you said that, because even if you custom build, then maybe like 5 years down the road, somebody put a house in front of you that wasn't there before, and all of a sudden it's not 100% anymore.
And when I worked with construction loans, it was a lot of them were custom built homes. We're talking 800,000 up to like 1.2 was kind of that range.
Yeah.
And you would think that working with a custom builder, you're picking out everything, that it would be everything you wanted, but you would not believe how many times the home is almost done, or they've been in the home for a couple years, like, oh, I really don't like those countertops. What was I thinking? And then they go and change. And my cousin, my husband's cousin, they built a beautiful home. They're in West Virginia, so a little different market. And she redid the whole kitchen. Like, they hadn't even been in the house for 5 years, and she redid, I'm like, all that money, you know.
And
But
I'll,
even if it's, you know, there's always gonna, your needs and your wants are gonna change a little bit over time. So just kind of keep that in perspective.
we might need to move a little faster, I'm assuming.
Yeah, I'm sorry.
No, it's about 15 more minutes.
Okay, all right.
We'll move quick. So view homes and submit offers. All I gotta say to this is where I help you with, writing offers. Is it a seller's market? Is it a buyer's market? I will say that right now, we're still in a seller's market. Inventory is still low. Basically, I help you as the realtor, decide how risky we want to be in this offer, how competitive we want to be in the offer. And, at the end of the day, it's your decision what you want to do with that offer.
So escrow period, this is where, this means you're under contract, and this is where things really kick into high gear. Everything starts rolling. At this point, multiple people doing a bunch of different things to make sure that you get to the closing table on time. At this point, sometimes first-time home buyers can start to feel a little bit overwhelmed because I'm all here saying, all right, we need to schedule this inspection, this inspection, this inspection. And I'm as the lender asking for, all right, I need updated pay stubs. I need those bank statements. Hopefully by this point, you've already provided your lender with all the documents they need. But if not, you're gonna have to buyers really have to start responding quickly at this point.
The biggest things here is just do not open any lines. of
Yeah,
credit.
and
Yeah.
let's touch on the do's and
Yeah,
don'ts here. Yeah, at this point, we have pulled a hard credit report, and we're gonna get pinged, we're gonna get notified anytime your credit gets hit again. So don't go out and buy that new furniture for that home, don't go buy a new car, don't go open any credit cards, store credit card, anything like that. Even if you apply, but you decide not to open that credit card, we're still gonna get notified, your lender will still get notified, and we're still gonna have to do a letter of explanation. I can't tell you how many times, we have been really close to closing and somebody goes out and buys a brand new car or that brand new furniture for the house on credit. And it can completely take you from a approved status days from closing to all of a sudden you're not approved. So it's really important to just keep your finances as stable as can be and your employment. So don't go and quit your job either. That's really, really, really important. And if you do need to make any of those changes, communicate. It's so important.
Contingencies. I touched on this a little bit. These are the tests and protections that you have as a buyer. We'll go over the three big ones, those first three. Home inspection is the one that everyone likes to talk about. That's the big one that a lot of first-time home buyers get scared of. It examines the safety and conditions of the home. The quick explanation to this is that the home inspector is gonna quote unquote tear apart the home. You're gonna get that report and you're gonna think the house is falling off, and 99% of the time, I promise you it's not, hopefully. The things that we wanna look at, and this is where I would say pick your battles. I'm not worried about one loose outlet on one of the walls. I'm not worried about that. I'm worried about the 6 major things: plumbing, electrical, foundation, attic, roof, and major appliances like HVAC and water heater and things like that. Those are the big ticket items. Those are the things I don't want you to pay for. That's where we negotiate or work with the seller on that.
And a good realtor is gonna advise you to get the home inspection. Some realtors won't because the house looks great or it's relatively new. But just because a house looks good, doesn't mean it's actually has a good foundation. Yes, ma'am.
I've heard that in a seller's market, especially in like Nova, sometimes people feel pressure to waive inspection.
So I'll be honest with this. This is kind of my territory.
Yeah.
So with my, I'll try to make it quick because we still got some stuff to do. With the client that I have right now, we were looking originally in Woodbridge, and I'm gonna be honest, we were getting beat out. It was hard because a lot of people were bidding 10, 20, 30, 40 over the list price just because of how competitive it is in this area. A lot of buyers were also waiving their home inspection. As a realtor, I will not say you have to do this. I will advise if the agent tells me, hey, these offers are coming in, there's a lot of people waiving stuff. There's a lot of people that are waiving finances. There's a lot of people waiving X, Y, and Z. I will let my client know and let him make the decision.
Yep.
at the end of the day, I advocate for it. If I could always have a home inspection in the house, 100%. But at some point, as a buyer, you do get kind of tired of losing out on homes, especially if it's been 4, 5, 6 months we've been working with this client. However, I want to say that at the end of the day, we just got a house and we were able to do a home inspection. So we got a house that just came on the market and the seller did accept it. So it does happen, but yes, in competitive markets, there is unfortunately give and take. We're gonna be in this market for a little bit, but just bear with it.
Yeah.
I'll skip over lead-based main. Appraisal. An appraisal is an assessment of the fair value of the property. This is the amount that a third-party person appraises the house for, and it will be what the bank lends you. You can offer that house, you can put an offer on that house for 400, but if the appraiser says it's 395, that's all the bank will give you. We can either bring that 5,000 to the table, or we can negotiate with the seller to lower the price. And then if you're in rural areas, septic tank, well inspection, these are just protections to make sure you're not getting a faulty septic. So condo versus HOA. So these are fees. You also get, as a buyer, you have the right to rescind your offer 3 days after receiving the HOA or condo rules. So if your condo rule says, if you get the booklet, the 100-page booklet that says you can't paint your door pink and you really want to paint your door pink, you can back out. These are the rules that you have the right to cancel your offer based off this. The difference between a condo and an HOA, condo fees are higher. They're typically in the apartment style buildings. Think of, apartment high rises, garden level buildings. They cover a little bit more. Sometimes they cover all utilities, but they are on the higher side. I've seen 200 to, on the luxury ones, 1,000 a month.
Yeah.
I've seen some big ones in this area. HOA, typically cheaper, townhouses and single family homes. They don't usually cover all utilities, maybe trash and sewer at most. They do typically cover playgrounds and other community amenities.
And that fee, even
Yeah.
though that condo and HOA fee is not paid as part of your mortgage payment, it does need to be factored in to what you can afford. So we're gonna factor that into your debt to income ratio.
It does not, a lot of first-time homebuyers ask this question. When they close on the house, they think the HOA is included in their monthly payment, in their mortgage payment. It's not, it's a separate fee. So yeah, this is something where it does factor into your debt to income ratio. So you might be able to afford a $350,000 home, but not when the condo fee is $1,000 a month, let's say.
Is the 3-day back out, is that true for like all around the country or just for like Virginia?
I believe that's a Virginia state law. I might be wrong about that, but yes, I think it's Virginia.
All right, the LE and the CD. So in the mortgage process, there's a lot of paperwork. As much as we do things virtually, electronically, by phone, email.
That's
It's-
loan estimate and closing disclosure.
Yeah,
Sorry, that's
yeah,
not on there.
Thank you, thank you.
Yeah.
It's still a lot of paperwork. But this LE and CD are the two most important forms that you're gonna wanna look at when you're going through that mortgage process. So both of these forms, they're in the same format. You can see the picture there, the CD, the closing disclosure. The LE looks very similar. Both forms are about 4 pages. They itemize what that mortgage is gonna cost you. So the first page, you can kind of see everything there. Loan amount, your loan rate, a breakdown of that payment, cash to close. So that's how much you can expect to bring to closing. It's also going to go through your real estate taxes. What is it going to cost you by this county and by the state to buy that home? What are the title charges going to look like? What are all the reporting fees?
And that closing disclosure is the final numbers. You need to make sure.
It is,
yeah,
yeah,
yeah.
so that the LE is gonna be issued to you up front, usually within 3 days of getting under contract. As long as there's no changes in the actual loan, like your mortgage amount, down payment, those fees can only change so much from your LE to your CD. And that CD has to be issued at least 3 days prior to closing, so you have time as that home buyer to review all of those figures. And so,
sorry.
yeah, no, these are just like the two main forms, and it's an easy way to compare apples to apples as well.
We're good.
Yeah, I'm good.
Closing day. So this is the fun part. This is the exciting part. So this is where you get to wire your money, sign the papers, get your keys. I do want to touch on this just because it's very important. Usually this happens with a lot of elderly people, unfortunately, but wire fraud is a big thing. And I will say, scammers are getting better. They can fool some young people too, I can tell you that. So wire fraud is real. Don't believe any email, call, or text from anybody saying that the wiring instructions for your title company has changed. You're gonna wire the funds to your title company. Typically, a good title company that's established, they'll have a secure portal that only you can access and the people involved in the transaction. The wiring instructions will be there. If you get an email, I'm telling you, even the email addresses, they've been spoofing people too. It might be the same email address. Call me. Call Jenny, call the title company directly. Do not lose your life savings. It's not happened to me. Hasn't happened to somebody I know, but through the grapevine, people have lost their whole life savings off of this. Yeah. Don't give your money to an Ethiopian prince across the country, anything like that. What to bring? Money. Obviously you need to wire your funds, ID, and avoid a check if there's any overages, if there was a mistake that was made or something like that.
Absolutely.
So now what?
Yeah, so as you're, thinking about buying a house, there are some things you can do to kind of set yourself up for success. So maintaining good credit is such a big one. One of the best ways to keep your credit score good is to make all your payments on time. A lot of younger people that I work with, they don't have a whole lot of credit. And so what that means, if there's one late payment that can have a little bit more of an adverse effect on their credit score than somebody who's had credit established for decades. So it's so important to make all payments on time. Credit cards. So keep your credit card balances around between 20 and 30% of the credit limit. You don't want to max out those credit cards. And one trick on that is if you find yourself, say you have a low balance, 2,000, 3,000, and you find that you're getting up to that limit every month, call your credit card company and see if they can just raise your limit. And that's going to help keep that ratio in line.
I'd be willing to do it if you haven't really had any late payments or anything.
Yeah,
like
typically they will, as long as even if you've had 1 or 2 late payments, usually the credit card companies are going to work with you. And then keep your longest credit card lines open. So if you opened a credit card back when you were 16, 17, or 18, probably 18,
Don't
yes.
cancel it.
Yeah, don't cancel it. You don't have to use it. You can stay at a zero balance. Just don't close it out, because one of the factors that is taken into consideration in that algorithm of creating your credit score is how long you've had credit open. Okay, so actual credit history is really important. And then other tips are just save as much as possible. Make a budget. Know where your money is going. Sometimes it freaks first-time home buyers out when I give them an estimate. It's like, okay, your mortgage payment is going to be around $3,000. Well, that sounds like a whole lot of money if you're not used to paying rent, or you're used to paying maybe $1,000. But take a look at your budget and see what you can get rid of. A lot of people, whether they're young, whether they're older, they waste so much money on subscriptions, things that just aren't necessary priority in their life. So save as much as possible, make a budget, and then just talk to myself, your lender, hopefully early in the process, to get a good idea of what your home buying options
That's
are.
for our client that just reached out to us after a year.
Yeah.
She just reached out to us this week.
Yeah.
And she called me and she was like, hey, can you help me just start a plan?
Yeah.
I gave my opinion, but I said to really know the numbers, I brought her to Jenny once again. She was connected with Jenny before.
Yeah.
I was like, look, talk to Jenny, and she should be filling out the application later today.
Yep.
But it is one of those things where I was advising her. I was like, hey, if you're able to move into an apartment, if we do have to wait another year and you need to renew your lease, maybe you and your partner can go to a 1-bedroom for a little bit, save that $200 to $300 a month.
Yeah.
If you're lucky enough to have parents that you can move in with, do it. I know it's gonna suck. I had to do it too. But it is 100% worth it, because my husband and I were able to put a good substantial down payment because we lived with our parents for as long as possible. So if you're lucky enough to have that option, do it. And I promise you, if you start to look at where you can save money, it will help.
Yeah, and have a plan. I mean, just like with school, you knew in 4 years, 5 years, you were going to be graduating. You knew what classes you needed to take. You knew how many credits you needed. You had that advisor that was helping you along the way. You can think about your home buying journey kind of the same way. Have a plan, know where you want to be. It might take a couple years to get there, but surround yourself with professionals like us who can help guide you through it. And if you're ever talking to a realtor or a lender and they're pushing you or they're not giving you the guidance, it's probably not the best fit for you. So just work with people who are willing to work with you on your timeline, and have a plan.
And I'll say, I get asked a lot, is it a great time to buy for me? You kind of mentioned it earlier. A lot of other realtors may say it's always a perfect time to buy, and they'll just say it as a common answer to every single person. The truth is, it may not be a perfect time for you. That's what a good realtor will do. If it's not the right time, I've advised clients to wait 6 months to a year. I had a seller client that wanted to sell within a year, and I was like, hey, you don't have enough appreciation. Maybe you can kind of deal with it a little bit more. And I'm advising my clients in the right way, not just trying to get the sale. That's a good realtor who will actually advise you.
And it's a relationship.
Yeah.
And Ari, we were talking about that before you guys came in, that a lot of what we do and in the business world as a whole is about relationships and working with people that have your best interest in mind, that want to see you succeed, and that are going to walk with you at each step of the way. And so, I would encourage you just as a whole to surround yourself with people, with professionals that want to see you succeed and want to help you along the way.
And we really do believe in real estate.
Yeah.
We love it. We live and breathe it.
Yeah, we do.
Every single day, a little too much. I worked more now than I did when I worked at DC United. But yeah, it is one of those things where we really do love what we do. We want to get people to that financial stability, to get to that generational wealth. I know it seems kind of unattainable right now. It is a hard time for young people right now, but I promise you it's doable. Just trust us. So thank you guys so much.
Thank you.
Did you want to read the couple?
Any questions?
Yes, so sorry, we'll get to you. There was a question a little far back from Asha again. She asked, regarding home inspection, is that a separate service that is different from hiring a realtor or a lender? I think they're asking, like, do you hire like an outside contractor?
Great question. So there are certain fees that you'll need to pay throughout the transaction. Of course, the majority, like 99% of it, will be paid at closing day. But your appraisal fee, your home inspection fee, any other inspections, you will need to pay most of the time on hand unless the contractor allows you to pay it at closing. But most contractors now, they kind of went away with that during COVID, just because not a lot of homes were getting to the closing table.
Right.
So they would do like an inspection and then have to fight to get paid. So most of the time, home inspection is about $400 to $700 depending on square foot. Appraisal is about $500 to $700.
Yeah, depending on the
Ish.
program, about 500.
So these are, you need to have that at least 1,000 on hand for the basic appraisal and home inspection. If you do get a septic inspection and well inspection, these are all different fees as well. But the majority of fees from the lender and from the realtor and all that's at closing.
And we take care of scheduling of that.
Oh, yeah.
So
Thank you.
as the appraiser, as the lender, my team takes care of hiring that appraiser. There's a lot of regulations around who we can use. And so that's something that we take care of with the home inspector. That's something that Amal will.
Yeah,
will
I
guide the
usually
home
have
buyer
a trusted
with.
home inspector. I typically give you options too,
Yeah.
just to make sure that it's your decision. But yeah, I have a couple of trusted ones that they're amazing at, and they don't overinflate. They don't say the house is about to fall apart. But they do give you honest feedback. Yeah.
Question, has a realtor that you've seen or known involved in condo communities in this area ever denied an FHA applicant or grant recipient?
So
Yeah,
it's kind of a little bit of both of us.
Yeah.
If you're an FHA buyer, it is kind of the start of my job is to make sure the condo association accepts FHA loans. And I don't know, to be honest, this is where I'm not familiar with how this all started, but it's with the, I guess, county or whatever, or if they're allowed to accept FHA loans, and I need to do my research to make sure that it's approved in that condominium community.
So
Yeah.
usually when somebody's looking at the listing, like on realtor.com or Zillow, somewhere in that big old long description, it will say no FHA loans allowed, or it'll say conventional only is typically what it will say. But that's where Amal will do that research.
And I
then-
will say some realtors
Yeah, they will.
mislisted
Yeah,
in the
sometimes they
listing.
do.
So yeah,
Yeah, but that's where it gets into where we can pivot on the mortgage end, and it's not unusual to pivot and go to a different loan program, when it's a better fit or when it's required based on the condo requirement.
but I'll say that is one of the only limitations when it comes to FHA is that some condominium communities
Yeah.
just do not allow it. And it is very rare to get an exception. I've only had it happen once and that deal barely made it. But yeah, it typically if the condo association says no FHA loans, then no FHA.
Got it. Okay, now, sorry, returning it to the floor.
All those, just to like follow up, all those inspection costs are on the buyer, right? And then what? Go ahead.
Yeah, yes and no for this area. If you actually go down this, I do some northern Richmond area as well, just because I'm in the Fredericksburg area. I'm already driving up north, might as well drive south an hour or two. But in the Richmond contracts, the wood destroying insect inspection in the septic, I think, well, I haven't done too many down in Richmond, so I don't have it off the back of my hand. But they also, it's on the seller to provide those reports to the buyer.
Yeah,
But
that-
home inspection is almost 100% on the buyer.
Yeah.
Yeah, but other inspections, sometimes depending on the area, county, state, it could be different depending on the contract. But yes, in this area, the Northern Virginia contract, everything's on the buyer. pretty much.
Okay, but in maybe a less competitive market, potentially could be
I wouldn't correlate that, to be honest, because Richmond, Henrico,
depends on the laws.
yeah, depends on the contract, depends on the local association and how they write their contracts. Because yeah, Henrico is absolutely ridiculous right now. I've sold 2 or 3 in that area. It's crazy. So
And then you might have already, I came in late, I apologize, but how do the realtor fees, is that on buyer and seller, like how does it work?
So it's funny,
that's gonna open up a can of worms right now.
so we just did a whole presentation, what, an hour and a half on realtor fees
I'll
because,
give the quick.
yeah, that works, but it's in,
Yeah, I'll give the quick response. Lawsuits are happening right now. Typically, the seller in the past has paid for all or not all compensation. Typically, it is on the seller to pay the buyer's broker, the buyer's agent broker and his own agent's broker as well.
Okay.
It has always been that the seller doesn't have to pay a standard amount. This lawsuit that came out recently, which I'm sure you might be referencing, essentially says that sellers are definitely not required to do that. I guess they were under the assumption, some sellers thought that there was a standard and there really isn't. I've always told my sellers that everything is negotiable. So as an example, let's say the listing agent says, I want to sell the house for, my fee is 6%. 3 can go to the buyer's agent, 3 can go to the listing agent's brokerage. It goes to the brokerages, not to the agent directly. So it used to be like 50-50 split or something like that. But now sellers have more willingness to give less to the buyer's agent. And we will see how that changes in the next year or 2. That doesn't mean that they won't, but it's always been that if the seller doesn't pay all of my fee, it will be on you or we negotiate it in the contract. It's always been like that. That has never changed. The lawsuit is just making things a little foggy right now. So
What happens at closing? Like, I'm not paying a realtor until I close on a house, right?
correct. And I will say 99% of the time, and I think in this area, we're not gonna see it as much. But 99% of the time, the seller will pay all or most. If there's a 1% or 0.5% that the seller isn't paying, that is the responsibility of the buyer, or we negotiate that through the seller through the offer. In other ways. So yeah, there's a little fogginess right now. Sorry if we're a little over.
No, you're good.
Yeah, that just opened up a can of worms.
I am gonna pause the recording
Yeah,
though,
yes,
just for
yeah. So you could say goodbye to them. We had one
Yeah.
more question. I think this is one where we could, I guess, head on out with.
Yeah.
It's a tough one, but in your opinion, your professional opinion,
Okay.
do you have